So this Bitcoin cycle map that I created is kind of shocking, actually. When you look at just how similar all of the events are in terms of length of time, even though the market structure for Bitcoin is currently vastly different than previous cycles, there's no parabolic top, etc., etc., the timing is so similar. What is up, guys? Welcome back to the channel. It is Friday. It is actually the early morning of Friday. It's 12:39 a.m. here where I'm at. I've been traveling recently, haven't had time to do updates, and figured I kind of just want to get one out now while I can. And I noticed that crypto social media has been really dead, really slow. No one's posting, no one's uploading. Well, because Bitcoin's doing absolutely nothing. And so recently on this channel, we were talking about a potential recession rally, that maybe we were going to see some kind of large bounce in the market. And well, that call so far has been a nothing burger. Nothing's happened. We haven't seen the God candle. We haven't seen a huge pump. And the recession rally in the stock market was barely a rally, guys. I mean, every time, this is the weekly chart. If you go to the S&P weekly chart, it's just a bunch of wicks. We come up, wick straight back down, come up, wick straight back down, and we can't sustain a pump, and neither can Bitcoin. So, you know, the recession rally idea is kind of dwindling. That idea is kind of fading slowly, and yeah, I'm starting to realize, okay, maybe we won't get that. In this type of price action in the stock market, the way that we're just not sustaining any bounces and just being choppy, sitting right along the 200 week, it's actually kind of reminiscent of what we've done in the month of October in other recessions before a much larger dump. You know, this is always a possibility. On this channel, we've been talking a lot about the recession risks. And if you guys haven't seen this video here called The Kiss of Death, this is a really interesting one to watch. If I were you guys, I'd check that one out, because it talks about the 200 week moving average. Now, this is not the same as Alessio Rastani's Kiss of Death. This is a secondary kiss of death, where we would basically break below the 200 week, come up, test it, right? This line right here. This is the 200 week. Break below, kiss of death number 2, before further continuation. This has been very common in all other recessions. It's still a possibility. And with the way that the markets just can't bounce, Bitcoin can't bounce, it's looking pretty weak. It's looking like there's not much interest. It's looking like there's not much confidence. Of course, anything can happen. We have a huge earnings week coming up very soon. I mean, this week, I guess, next week. Huge earnings for a lot of top companies. I'm kind of thinking that the earnings recession is likely to happen. I'm not going to act like I'm confident on what direction we're going, but we have to definitely consider that there are risks right now, and that downside is completely possible. And we're going to be talking about actually some bearish continuation patterns that we're seeing right now for Bitcoin show up. But before that, I don't know if you see this behind me, we have Crypto Fight Night coming up on November 12th. November 12th, Crypto Fight Night exclusively on CryptoWatch. You can watch it for free on CryptoWatch. You can scan the code that's on the screen right now, download the CryptoWatch app, and watch Crypto Fight Night. A bunch of like Twitter, crypto influencer people fighting each other. Definitely check it out, guys. Download the app. So I want to talk about this Bitcoin's bearish continuation pattern on the daily RSI. What we see is that whenever we have a slight uptrend taking place recently, you know, since the 69K top all the way down, whenever there's a slight uptrend happening, we get an RSI uptrend. And then when we break below that, we get a huge flush down. Same thing happens here in May when we had the slight uptrend, break down, huge flush. Over here in June, uptrend on the daily RSI, uptrend on price. We break down below the daily RSI uptrend line, flush down. And so currently we're sitting in a similar position, a little bit different this time, because instead of having these uptrends in price, we're kind of sitting in a little bit of a flat zone. So a little bit different market structure. It is a possible zone where we could sort of bottom and bounce, at least for the short term. But at the same time, Bitcoin is sitting right on this daily uptrend line. We're actually kind of falling below it right now. And if you look at that last low right there, about 43 on the daily RSI, 43. If we get below 43 on the daily RSI, that is a confirmed breakdown on the daily RSI uptrend. And that would likely mean a flush down. If we get above 57 on the daily RSI, I would say that that's probably, if we can somehow miraculously find support and break above 57, then we would probably see a move above 20,500, which would probably cause a short squeeze of some kind. So those are the key levels for the daily RSI. Remember, this is a classic so far. I mean, historically, during this downtrend, this setup is a classic bearish continuation setup. So just be careful. If there's any downside in the stock market, it's not going to be good for Bitcoin. It's not going to be good. And normally, when Bitcoin sees a breakdown on the daily RSI, I mean, from the breakdown level, that's like 30% down from there. From the breakdown level, 30, 40% down. This one, 20% down. So if we saw a breakdown 20, 30%, I mean, that's kind of rough. That's like 15,000, 12,500 potentially. It can get rough, right? This is a recession. There's not too much confidence. And again, if the stock market breaks down, Bitcoin's not going to do so good. So just keep that in mind. I'm not yet giving up on the idea of a major bounce here. If the S&P 500 sees a major weekly close below the 200 week, then it's looking pretty bad. But as long as we're maintaining it, there's still a chance for some kind of rally into the zone. But we've talked about this several times at length on this channel. The 200 week moving average is a moving average that we fall below during recessions. And we fall below it to a very large degree in previous recessions. And we're sitting on it now. So regardless of a short-term bounce, a recession rally, ultimately, we're likely going to go below this and significantly below this. And if that happens, expect lower prices for Bitcoin. Usually in every cycle, Bitcoin's falling, 85%, and we're only 75% down. So there's a lot, 10% more historically to go. So I actually just started a newsletter on Twitter. You guys can check it out. The first edition of it is free. You can go on Twitter, hit start reading, brings you there. $5 a month if you want to get all the posts in the future. But this one's free. You can just go to it, check it out. The Bitcoin cycle map weekly chart. And so I created this Bitcoin cycle map to show a little bit about where we are in this current trend. So this Bitcoin cycle map that I created is kind of shocking, actually. When you look at just how similar all of the events are in terms of length of time. Even though the market structure for Bitcoin is currently vastly different than previous cycles, there's no parabolic top, etc., etc., the timing is so similar. It's kind of crazy. Looking at the first cycle here, from the first halving, 51 weeks to the all-time high, right? From halving to all-time high, 51 weeks. The second cycle, from halving to all-time high, 74 weeks. This cycle, from halving to all-time high, 78 weeks. Okay, so they're kind of similar there. Then from cycle top to bullish pivot out of the macro resistance, 81 weeks the first cycle. Second cycle, from cycle top to bullish pivot, 68 weeks. From the third cycle, cycle top to bullish pivot, well, it's an estimated 75. Now, it's not just that. It's also the first cycle when you have the bullish pivot, 54 weeks to the next halving. Second cycle, the bullish pivot, 58 weeks to the third halving. And it would give us an estimated 52 weeks to the fourth halving. So in terms of timing and where we are in the cycle, it's all very similar. We're pretty much on track. Despite all the craziness right now, Bitcoin's actually on track. It's down 75%. Usually we're down 85%, so there is some downside that's still possible. If we reach the downward macro trend line by April 2023, that would be pretty much the average length from cycle top to reaching breakout of the macro trend line. And then we would just spend 52 weeks until the next halving. I mean, it's all very much the same. The only real question here is how much more downside do we have left? And how much is that going to change the timing of the bullish pivot? It's kind of hard to judge right now because the market's not doing much. We're not really seeing much action. But again, for timing, we're doing pretty good. Surprisingly, Bitcoin's actually on track. At this point, it's about accumulating, staying patient, having dry powder in case the market goes lower, you average in more, and then being more patient. and then patient again, and waiting and waiting and waiting. And before you know it, at some point, guys, we'll be, coming up to that bullish pivot, and then we'll just have 52 weeks until the halving. Time flies, so just hang in there. I know it's boring right now. There's like no content anywhere being posted. And then also in that newsletter, we discussed what I talked about earlier in this video, which is the daily RSI setup, the potential bearish continuation pattern that we are in right now. And so if you guys want to subscribe to this newsletter, it's kind of just like a new form of content that I'm testing out. Definitely feel free to go to my Twitter. The button is right there. The earnings season coming up this week is going to determine a lot. And the 200-week moving average is really my main concern. This moving average here, because again, in all previous recessions, we're well below that. So if we start falling below the 200-week, it could be a bit of an elevator down for a little while, and things would get ugly. And that would be the point of maximum fear and least confidence, which is traditionally one of the better times to be a buyer. So we're kind of in the middle, right? If you're looking at like 2008, 2001, we're kind of like in the middle of the recession where things are about to get much worse. I mean, historically at least, things are about to get much worse. And then just as everyone gives up, that's when you become a buyer. You might have to wait a few months. You might have to wait until, early next year, mid next year before actually seeing a recovery in the traditional markets. But that's just how it goes. The average recession length is 650 days. And that's going to put us somewhere in the second half of 2023. So just be prepared for, a lot of uncertainty and more downside, but it is a great opportunity. But remember, guys, Crypto Fight Night coming up November 12th. It's free. Download the Crypto Watch app. You can watch it for free. Hit the like button, subscribe, join the newsletter if you want to, and I'll see you guys in the next video.